But there's there's all these regulators that are trying to restrict it, and that was one of the problems that AngelList has been facing, along with a lot of other crowdfunding websites. So, what were some of the alternatives discussed in the case? Yeah.
There was crowdfunding and accelerators slash incubators.
Yeah. Name a few.
There was the donation one, the crowdfunding, where
Indiegogo.
yes.
hmm
There's equity crowdfunding.
hmm Yeah. So incubators like Y Combinator. I mean, even Chapman's Panther Match, even though it's not really a big incubator, but you still get a grant of like $5,000, right? So every school has like a mini incubator or accelerator or a certain program to help you know uh, help help and support entrepreneurs. So those are some of the alternatives that you can look into. So we're gonna talk a little bit more about that today. But I guess like those are some of the discussions about AngelList. So let's just go over some of the homework that we talked about. I guess do you think that equity-based crowdfunding will play an important role in the financing landscape for startups going forward? Which startups and investors will be most attracted to this mode of financing, and what will be the drivers of success? Anyone want to share their thoughts? Homework. You guys did the homework, right? Okay. It's like middle of summer, doldrums.
I mean, I don't see why it wouldn't play a big role. That was essentially what I wrote. And for mine, it was like, yeah, it seems fair to, instead of exchanging it for, either a guaranteed amount of money or, I don't know, a product or service in the future, something like Kickstarter, it would make sense to sell just a portion of your company outright. You could just negotiate that as the process goes on. I'm not entirely sure.
Yeah. And Logan, would you ever like invest in one of these companies rather than a startup? I mean, a stock.
Yeah, I think I would actually, because you could probably, hmm, yeah, yeah, I would. I don't really see a difference between this and a stock per se.
hmm
Because I don't know the calculated risk off the top of my head, but I would say it's, yeah, I would invest. I'm just gonna leave it at yes. We can move
So
on.
yeah, so remember when Andrew Romans talked about um, the beauty of what do you call it the private markets is that, for example, if Ahmad's startup that you're considering investing was building a lot of momentum, and then you heard from Ahmad directly, and he said, "Hey, um, Logan, I want you in on this round because we're about to close a deal with, Disney." Like you have insider information to move based on that information, right? But if it was public markets, you'd probably go to jail, right? So there's a certain advantage that you have the more insider-ish you are. And I think that's one of the reasons why if you look at someone like Peter Thiel, who has like a 22,000% return, which I think is might be higher than Warren Buffett's return. Like who has had the greatest percentage return? And like if Warren Buffett had the highest percentage return, what is his return? Does anyone know? Buffett's accumulative return percentage. Let me see. I'm just curious myself. Okay, it doesn't really say. Okay, but anyway, someone like Peter Thiel has like a 22,000% return, right? So he's invested in Facebook, Square, no, not Square, Facebook, PayPal, recently Palantir. I mean, a lot of big companies, right? LinkedIn, Yelp, ton of amazing companies. So he's like such outsized returns. He was also a hedge fund manager for about 10 years and he made 15% year over year, but he said, I don't want to do this anymore. I'd rather just invest in private markets, which kind of shows like if there's anyone who really did an A/B test on this, maybe it's more advantageous to invest in private markets because if you're an insider, you have such outsized returns, right? So if you are very comfortable and you have a distinct advantage of understanding certain parts of tech. So let's say Puya becomes a blockchain and crypto expert. It might be best for someone like Puya to invest not just in crypto, but like crypto related startups or blockchain related startups to really take advantage of that market. And if you look at someone like a PE from like Vista Equity Partners, they do something like that. They have a long short hedge fund where they use all the information that they extract from the private markets, like certain trends, to get an advantage for their hedge fund. But the majority of their portfolio is just their PE. And what they do is they buy tech companies specifically. And they were the first ones who really went deep into that game a long time ago. So I think it makes sense. It's a great diversification play. Even if you're a savvy investor, you don't necessarily have to burden, the risk. You could hedge by co-investing with a lot of different investors at the same time. What other types of investors would be most attracted to this mode of financing? What about friends and family? Like instead of convincing one, like wouldn't you just say, hey, why don't you just like pay me via AngelList, right? Funded through AngelList. Yeah, that's what we used to do. So we had a bunch of friends who wanted to invest in our startup. We just said, hey, just pay X amount of dollars in AngelList. Other people that get really excited are generally like tech enthusiasts or people who want to just put in a very small amount. So remember, some of these crowdfunding websites, you can invest as little as something like $100, and then you can earn shares of a startup. So for those types of investors that want a much larger piece in a smaller pie, AngelList, gets is a really exciting option for them. Okay, next question. Do you think that several niche crowdfunding platforms will continue to coexist, or is this a winner-take-all market? What steps should AngelList take to be successful? Will this become like LinkedIn, where there's like only, or like a Facebook, where there's only like a one go-to, or just like a few go-to apps, right, related to that, or is there going to be like 1,000 AngelLists in the future? So is there going to be a consolidation trend, or is it going to be more like fragmented over time? Any thoughts?
For the homework, I answered this. For a while, it's going to be a segmented market, like with specific niches. So you're going to have your LinkedIn, obviously, but AngelList, what they're kind of known for, or what I think their biggest money drawer is AngelList Ventures, where they have they're called rollable and venture funds online. You can like subscribe to people's VCs and stuff like that.
Mm-hmm.
So they kind of created like a Patreon, but for venture capitalism, which is interesting. But yeah, I think they'll be able to coexist for a long time, and then they might just get bought up by some conglomerate or something like that.
I agree. I also think over time it's going to continue to consolidate because these types of businesses rely on a network effect. So more people like flocking towards certain stocks, and usually these types of venture opportunities are very long tail, meaning you get a ton of people attracted to a particular startup and it just blows up, and then you have like it's kind of like it's an 80-20 rule, like 20% of the companies get like 80% of the funding, that type of thing. So over time, if there's that kind of concentration, I would think like the best companies that happen to be in a particular website over time will continue to use that website, or the best investors that did well on those websites will continue to keep using those websites. So over time, I could see more and more users going in toward one direction. Um, Similar to what happens a lot in the social media space. So that's my assessment. It seems like it's heading in that direction since the case was written. But we'll see. So what are some of the things that you guys liked about the business model? What are some of the things that you guys didn't like about the business model?
I really like the syndicate leaders because so they basically create a platform for small investors to invest in startups, and so the platform also creates a situation that other small investors can see the profile of like leader syndicates and track them, and to be make sure that they are really accredited and they know what they're doing.
Yeah, it was a good idea, right? Like having a syndicate, job listing, um, social media stuff. I mean, pretty cool, right? But from what I showed you guys earlier, did anyone think it was a little bit too much, like too hectic?
It's a lot to navigate, for
It's
sure.
yeah, right. It's like a maze, right? So that's one thing back then it was a lot more simpler. This was pre-syndicate when I joined. It was just a website, some blog stuff, and kind of like a LinkedIn. But now I'm going in there. I don't even know where to look for a job. I don't think they even have it anymore. I don't know. That was weird. That was a weird experience. So that was like the one thing that I didn't like about this company was they had a lot of good network effects that they could piggyback off of, but it didn't seem like they really knew how to leverage it the right way to really create that moat and defensibility. Like it seemed like LinkedIn stole all their users eventually because people stopped creating AngelList profiles like 8 years ago. That's why none of you guys have ever heard of AngelList, despite them being the biggest player in this space. It's either them or WeFunder, I believe, but it's very unfortunate. Okay. All right, last question. If you're a VC investor, do you invest 25 million in AngelList at $150 million pre-money valuation? Why or why not?
For this one, I said for this company, it seems like premature. So I would be like skeptical about the pre-evaluation of the company and the firm actual worth in the coming years.
So the valuation is way too high.
Well, yeah, 25, I think it's too high.
Yeah, it's the private equity multiples that probably um, make you skeptical too. So I like that. That's good. Anyone thought that was this would be an interesting investment? Would anyone invest if the valuation was more favorable? Maybe, maybe not. No. Logan, why not?
I put for 2013, I put no as an investment, but I said, in 2021, I think I would.
Interesting.
Just because the information from the article I think was from 2013, and I went on their website and I didn't even know the recruiting function was still a thing. Like the only thing I found was AngelList Ventures.
Yeah.
Yeah.
Okay. So big, given where it's at right now, that valuation would make sense. But I feel like at this point they're kind of they're past their prime. I feel like they're just declining. But hard to tell. Cool. So let me see here. It's double print. Okay, so let's talk about some crowdfunding websites and different ways of raising capital. Does anyone have any questions about the AngelList case? Did you guys find it interesting, the topic? It's all right? Okay. So
I think I had one question. In the article, they said that Kickstarter publicly was against equity-based crowdfunding, and I didn't understand why they would be.
Oh, Kickstarter was against equity-based crowdfunding.
Yeah.
What is Kickstarter? What's the difference between, it literally leads into what we're going to talk about right now.
Crowdfunding site. I don't know too much about Kickstarter, but
Based on the reading, right? Chapter 9, what would be what category would Kickstarter be under? So Kickstarter is a product-based crowdfunding approach. What it means is that you give away free product or free service ahead of time, and you get the money ahead, so you can build your product, right? So remember, I don't know if I mentioned my friend Hyun Lee, who's also in our, oh yeah, he was in one of the videos, right? So Hyun Lee, remember he talks about how he did stand desk, and normally they're doing the desk that goes up and down for $5,000, but he literally rebuilt it with his with a few friends, and they did a Kickstarter campaign, and then they were able to get the cost down to 500 instead of $5,000, right? So then he talks about how it blew up, and then it was oversubscribed. So then there was a operational challenge. Like he would have to move to China to meet the demand because the quota was so high. So that's an example of a Kickstarter, right? So you're saying that, hey, this is what I'm going to build. This is the money that I need. If you buy it now, you're going to get a discount, right? And I will deliver it to you once the campaign is over and once I hit my quota. So if you look at something like Seed Invest or WeFunder, which is the same thing as AngelList, they're in terms of their crowdfunding, they're giving away equity. I'm giving you X% of my company if you pay me Y amount of dollars. So I can't remember the part where Kickstarter was against it. My apologies, but I would imagine that it would be unfair, right? From a competitive landscape where they would feel like they would be overwhelmed because people would probably want equity over like a bicycle or something like that. I mean, if you were to get into Peloton stock today, right? Vince, would you rather want a $2,000 Peloton or or let's say 10 years ago, or would you want a $2,000 worth of Peloton stock at that time in like 20?
At that time, maybe a bike, but now I'd want the stock.
Exactly, right? So that's the thing. The bike is not going to appreciate over time. Like that 2,000 is 2,000, right? But the stock has the potential for upside. So why would you, generally speaking, why would you want the bike unless you think the product is good, but the stock is going to go down, right? So I would probably think that would be the rationale behind that. Any other questions? Okay, cool. So you have Seed Invest, you have WeFunder, you have GoFundMe, Indiegogo. Everyone's seen a GoFundMe account, right? No? Okay, so GoFundMe is basically kind of like a charity site, right? If someone passes away, someone has cancer, so it's kind of like a donation site where you help. Oftentimes, your friends and family members that are going through certain grievances or tragedies, yeah, or you could even do a GoFundMe account for your own personal ventures as well. But I think it's evolved into more of a personal grievance site, I think. Does anyone want to add more to GoFundMe? Has anyone done a GoFundMe as of late? So I feel like it's definitely, before people would have like GoFundMe accounts and like, hey, support my new rap album, back in the earlier days. But I think it's evolved where it's just more for yeah, it's just like life events, graduations. I see like birthdays, like people ask for donations, so then they can donate to other charity causes. But it's just one of those like nonprofit crowdfunding accounts. WeFunder, Seed Invest, same thing as AngelList. Indiegogo is kind of like for independent projects, oftentimes like related to arts and movies, etc. So each one has a little bit of its niche. So all these crowdfunding platforms are slightly different. So we talked about some pros and we talked about some cons in the past. I guess like what are some cons and some pros of crowdfunding besides getting fundraising? And we can just blur it out. Like what are some of the things that you guys like about crowdfunding? Let's say you guys are going to do a startup, right? You're going to start the most amazing widget company, and the widget factory you're going to build is so amazing. It turns out like 1,000 widgets a day, right? And you're trying to do a crowdfunding campaign. Let's say you did one on Kickstarter, right? You're telling someone, hey, I'm going to give you 1,000. You're telling people, or I'm ready to sell like 100,000 widgets. Please fund me $100,000. What are some pros and cons of that kind of I guess like that kind of arrangement if you're trying to raise money through product crowdfunding? Let's start with the pros.
One of the pros could be the ease of access for, just everyday people. They don't have to be serious investors. They could just log on to Kickstarter, see something they like, drop a $1 in the bucket, maybe 5, maybe 10, who knows? But then the con is exactly that. They're usually going to give you a lot less money, and they're probably a lot less serious of an investor as well.
Nice, dude. Accessibility is great. But the downside is the seriousness. You're not going to get savvy investors, right? What are some other stuff that that could sway your decision for good and for bad?
Isn't there a time limit as well? So like if you don't reach the goal, the people that choose to invest, it's not funded.
Mm-hmm. That's a good one. Yeah, there's a ticking clock behind it. And what's added to the pressure is that you're stacked right next to a bunch of other products. So they could take away eyeballs, right, from your page. What else? What about like the logistics of it, right? We talked about Hyun's example, for example. Did he ever build any of the products before he launched it? Standesk? He probably built 1 or 2 in his basement or his garage, right? But it never really hit the market. It hasn't been like fully tested, right? So there's a logistical problem where there could be an error, right? Like delivery time, risk to the potential consumer. The product might not be what it could be. It might have not been tested as much as it should have been. We're still missing like the biggest advantage here though of product crowdfunding. We should know this. This is the most important part. Yeah.
Is it scammers? The
No.
cons? Oh,
No.
Is it that it gets the name out there for the entrepreneur, or like the?
Oh, that's
like,
really important. I would say that's the second important one, most important one for product crowdfunding. It's free marketing, especially if it has some virality to it, which is very different from oftentimes from equity crowdfunding, because product crowdfunding, you're generally doing a B2C crowdfunding play, but like equity crowdfunding, sometimes you'll do a B2B type of business, and no one's going to be excited, right, about a data intelligence insights app, right? Or some kind of like subscription generation software, the one that I did. So, there's an advantage to product crowdfunding, the visibility. But what's the most important? We're still missing something very important that we talk about a lot in this class.
It decrease the risk of investors somehow.
So you're close. It's related to investors. It's not the risk that you're reducing.
So
What-
they don't have any liability, right?
Investors don't really have liabilities, right? You just lose your money or you make money, right? It's not like you're gonna get sued and then the consumer sues the investor, right? That doesn't. I mean, you technically could, but you're not gonna win the case, right?
In case of like the business doesn't success, they have like I think they had something, right? They have like some insurance. But what was that? I don't know.
No. So I think FDIC or SIPC insurance. I don't know. Anyways, okay. Let's take a step back here. When you're giving away a product, right? Like you're giving away widgets. The person who gives you that crowdfunding amount, right? Like 100,000, right? Let's say you just bought all 100,000 widgets for $100,000. Does that affect your cap table? Yes, Lai, you're ready. You're about to say something.
Okay. Is
Yeah.
it because it doesn't affect your equity since they're
Yeah, you
funding
have
it?
you've got, like no equity. You have no future responsibility to that consumer. It's just a one-off. So it's a clean transaction for you. It's called revenue funding, right? You sold a product that doesn't exist. It didn't affect your cap table, right? And you screw up. I mean, the only thing you lose is your reputation. You still got the money, right? As long as you close that round before the expiration. Because some crowdfunding campaigns, if you don't raise the total amount, your campaign just is canceled. I don't know if they do that, but in the past there were a bunch like that. But now there's all these different types, variations all over the place. So that's the beauty of product crowdfunding. As Perja said, the second most exciting part is the visibility of the product, right? But the first part is that it doesn't affect your cap table at all. And you're off to the races. So you're almost skipping that one step. So normally you have to get the customers, you have to get the product, you have to get the investors, but you're using one stone to kill two birds, right? Which is a really beautiful strategic play if that is a good fit. Now, combining 1 and 2, right? What if you're not able to, you got all this visibility and your product is makes the news and all that stuff, but then you only sell 50% of your widgets. What's wrong with that? But you still need 50K, right, to raise. Like what's the problem here? Aside from the fact that you can't, it's not a 100 or 0 situation. You can still take home 50K. Let's just say this is not an all or nothing crowdfunding campaign. Let's say you can still take home 50K, but to really launch the business, your initial startup cost is about 100 grand. So you fell short 50K, but you still got the media exposure. What's wrong with that? What's the added risk to that? So let's say you're all over the news, right? And you're talking about you made, the best widgets in the world. This is the most, innovative widget. And now you fell short of your quota that you needed, right? You wanted to hit 100K, but now you're at only 50K. You're knocking on the door of Andreessen Horowitz, right? And you have a meeting with Ben Horowitz, and you're doing your pitch, and then he just read about your article and your blog, 2 days ago, and he says, "Wait, how come you didn't fulfill that 100K?" Is he going to be excited about it, or is he going to be skeptical about the strength of the product?
Skeptical.
Probably, right? Because dude, you had the perfect opportunity to showcase me product market fit, before product market fit, and it shows the market doesn't like your product, even with all the PR buzz that you got. So that's the problem with, and the risk is that investors are very fickle. So if you try to raise 100K and then on a crowdfunding campaign, all of a sudden you raise like $23 million. I mean, you can go out and raise another 50 million, right? You're in great shape. And there are some companies back in the early days that actually did that when it was really new and novel. But if you're not able to hit those numbers, when you go and try to raise from serious investors or even investors that follow these platforms, they're gonna be like, dude, like, how come you only fulfilled 20% of that 100K? Like, I saw you on that Indiegogo campaign. You're on my Facebook feed. So it's gonna be in a situation where you need to, justify yourself. Now, the other thing is, all right, let's talk about equity crowdfunding in a little bit. But is that kind of clear in terms of like product crowdfunding? Okay, so these are just some of the crowdfunding stuff. Like, you had Oculus Rift back in the day. Some watches, special watches, like COVID related special masks. This is a kind of like a charity crowdfunding site. So there's all these different types of crowdfunding websites that you can pick and choose from. I think we skipped ahead and talked about product crowdfunding first because that was part of the topic. So these are just some of the pros and cons. So additional things that we didn't talk about, wide reach. Well, we talked about that. There's donation-based crowdfunding, rewards-based crowdfunding. It's much less regulated than equity crowdfunding. Like, you can throw any product out there, and then allows for validation of concept. So that's a problem. If you kind of throw that out there and it's still your beta version, the market and investors might interpret it that this product has no product market fit, and they might just move on. Right? You might say, oh, it's a beta version. They're like, oh, well, you still just count it as that. Let's talk about equity crowdfunding. So this was kind of cool. We actually did an equity crowdfunding round. I think this was our WeFunder campaign back in the day. I think we raised a little more than 317K, but this might have been a different one. But looking back, we should have gave out like more free movie tickets than equity. It was a expensive round, I think, looking back. But this was a lot of fun because I think we did 2 or 3. I know we did one through WeFunder. We did one through I think we did one through AngelList, but we did Seed Invest too. So we did it's been such a long time. We did Seed Invest, we did WeFunder. I can't remember if we did AngelList. Still kind of blurry. I should know this, but it's been so many years. But where did it go? But you could see here that we raised a good amount. And my advice in terms of raising from crowdfunding, if you're going to do equity crowdfunding, as you can see here, we had 95 investors, and it's so funny. A couple of them actually became successful, and they became like professional angel investors. And I actually reconnected with them, like one of them like last year and stuff, and he wanted to get involved in whatever venture I do again, even though Dealflix didn't have the type of exit that we hoped that we would. But it's really cool to kind of see other investment professionals just try to master their craft. But when you're doing an equity crowdfunding campaign, it's a lot more difficult to raise money through equity crowdfunding and then get a really strong investor than doing it the other way around. Does that make sense? So if you raise from Andreessen Horowitz or Sequoia, Colsa Ventures, like some of these big boys, and then you do a WeFunder campaign, like that's going to get filled like right away. But if you do a WeFunder campaign, or like a like a WeFunder campaign or AngelList campaign, and then investors see like 100 names on the cap table, and then Sequoia's trying to get in, they're gonna be like who the hell are these 100 no-name investors? So when you're doing these equity crowdfunding campaigns, you want to do it the other way around. So I see a lot of first-time entrepreneurs, they get really intimidated in terms of raising money from really well-established investors. So they try to take the easy route, but the easy route is kind of like the dead end route here. So you want to be very, very conscious because we talked about this, a few times. It's a very brand conscious market. So you want to layer, the cap table in a way that it's built so that you're able to get the right team and the right people to help you succeed. And the way you do it is by being very strategic of who you reach out to first. So just some, overview stuff. I mean, there's a lot of regulation. Things are evolving since 2016. I don't want to get into this too much. There's accredited investor sites and unaccredited investor sites. I think this has changed. Raise up to 1.07 million annually via debt or shares online. So they put a limit in terms of what you could raise, but I don't think that applies. I'm not 100% sure. So I won't test you guys on that on the test. The entrepreneurs can dictate the terms, right? So you can create your own term sheet and then you post it online. IPOs are declining, and this is another market for more liquidity. As of a 2018 article, only about 1,400 entrepreneurs have tried a Prestart engine article. So there's still a lot of entrepreneurs who haven't done this on a consistent basis. So it's another weapon that you can have in your arsenal to really scale your company. We talked about this can be credited or non-accredited. You can use shares that are common or preferred or safes, notes. They're all allowed. It's basically how you want to structure the deals. Just some examples, right, on what companies are using unaccredited equity crowdfunding portals. So you could check it out when you'd like to. And oftentimes, if you sign up for these sites, they'll give you like weekly updates on which startups are just making a lot of headway. So it's a pretty good thing to follow if you're interested in getting involved. We talked about the difference between product crowdfunding and equity crowdfunding, but yeah, I mean that's a different disadvantage of equity crowdfunding. You're giving away equity, so you're gonna have this like really long tail cap table of like investors that put in $100. But oftentimes that's why the AngelList syndicate is so powerful, because it goes under one syndicate as well. But in some cases it's not separated so easily. And they'll start reaching out to you, making comments, and then you think you're talking to some like big investor, and then you look at the cap table like, dude, $200 he invested. Like, what the hell? It's like not even worth my time answering to this email. So that's those are just some of the pros and cons, and this is just kind of how that market works. Any questions? Okay, so this is just pretty much more stuff. I think we talked about more of this stuff. Generally, equity crowdfunding or crowdfunding in general is a lot more helpful for B2C products. It's even more helpful for like, if you're using it for a product crowdfunding campaign, because you have people specifically looking for that and it de-risks you. But you'll rarely see B2B products using crowdfunding approaches that do extremely well. There are out there, but not a large number of outsized successes. Limited time pressure. Projo, you mentioned that. Yeah, just overall great to supplement for your rounds. These are just some more of the more successful ones. Pebble Time, they raised 20 million through Kickstarter. Coolest Cooler, you guys could like dig up some of this stuff. And yeah, so this is pretty much it. Any questions from the crowdfunding lecture? Okay, so let's take a 10-minute break, and then we're gonna talk about some outsourcing and offshoring tips to scale your business, and some additional like incubators and grants and stuff. to reduce cost when you become an entrepreneur. So we'll reconvene at 7:25. Does that work? Okay, cool. Okay. Mi amigos. How's it going, Lai? You back? Ready for the last stretch? Okay. We're almost there, guys. It was really well done quarter for everyone. So let me scroll down here. Okay, so we're gonna talk about just overall like cost reduction strategies as an entrepreneur, like what you should do and how you should think about scaling your venture while minimizing risk and minimizing um, your your exposure, right? So this is just kind of an example, right, where you're looking at various stages of a company, and you're going through. This example specifically talks about like a pre-med type of startup. But as you're going through your cost, normally in terms of cash flow, you're going to have a burn rate that's going to continue to kind of eat up, right? So oftentimes in the VC and PE space, they have a metrics called peak cash need. And usually that is your worst year that you anticipate and how much buffer you could create in that zone. So I'm not going to go deep into that concept because I think that in itself is another, lecture. But the whole idea is of this concept is that until you freaking break even, you have to figure out how to weather the storm as much as possible. So every company will have this cost process, right? And then it'll come up until its break even point. The more times the more you can like hedge this by getting grants. And this is a great example if you're in more of the medtech space, like NHI grants, STTR grants, etc. These are some of grants that are eligible. But because you're not doing something in the medical tech space, it doesn't mean that you don't have access to certain grants. There's always ways of outsourcing grants, incubators, etc. So you can reduce cost. So we're going to talk about some of these concepts. So what are the benefits of grants? Well, it's a cheap form of financing. It's just like doing a product crowdfunding campaign in a way. You're getting money to build your product, cover the operational expenses. You are not giving away ownership, right? So that's the beauty of a grant. There's no liability, there's no overhead on the cap table, there's no debt incurred. It directly reduces the investment. VCs love it because it's very attractive to them, and it shows that you're very scrappy, and the government or whatever organization that funded your company through a grant, you probably means that you've been vetted out through a very competitive process of receiving that grant. Not always the case, but it could likely indicate that. One of the deals that we're looking at in Canada, when Canadians use developers inside Canada domestically, they get subsidized from the government. So a lot of startups in Canada, their overhead in terms of paying their Canadian developers or anyone in the like web designers, anyone in the technology space, when you see their overhead, it's at least a good like 30-40% cheaper than the US market, I've noticed. And when I ask them, it's because they have a funding program where they want to protect their technology so that they end up providing grants to these Canadian tech companies to assist them with their growth. So grants are very advantageous, something to always look into. This is just a quick, compare and contrasting with venture capital. Grants, decent chance of getting funded, 15 to 20%. You just have to look around. There's all these school grants. There's like cage matches. I remember back in the day, a couple of my Silicon Valley friends, every weekend, even though they're working at Google and Facebook, they would just do these startup competitions and win like $5,000 or like $10,000 and never run the startup. So they would do these hackathons and they'll just keep doing this as like a side hustle. and they'll just take that money to like fund their own startup while they're working at Google or Facebook. It's like, guys, we need funding. Like, oh, let's fly out and do another hackathon in like Austin, Texas. All right, So they just be like these serial, what do you call it? Competitors in these tournaments, which was really, really funny. So there's a lot of cool things out there. A lot of these things, add up. What I like about grants is like, it's not limited to just 1 or 2 grants. You can apply to as many grants as possible. It's not like you're filling up your cap table and you can't oversubscribe it, right? You don't have to issue new shares or anything like that. If you're really good at writing essays, really good at interviews, etc., something that you should really pursue. Strategies, different types of grants, right? So you have the proof of concept funds, like you got incubators, universities. So I'm sure we talked about this before, but Techstars, right? They'll actually not Techstars. Techstars is a bad example. They for 6%, I think they give you like $100,000, $150,000. But Panther Cage Match, they'll give you a grant or a prize, basically. I know University of Chicago does that as well. There's many different schools that they do that. Skydeck Accelerator, I believe they have a grant, the one out of UC Berkeley, and you just need to be, you just need to come from a UC school, just one of your co-founders, in order to qualify, or any employee even that has like 1% of equity would qualify for that. Yeah, Puya.
So is it tax deductible when they like give the grant, or so why it's like so cheap? I don't understand that. So,
What is so cheap?
The rate of return. So you said 6%, you can get like 100,000 with 6% like annual fee. So
Oh, no. So that's a bad example. So I was trying to say, when you're doing like an incubator with Y Combinator, you're giving away 6% of your company for $150,000. So you get a bad valuation. So that's different from a grant from an accelerator. We're going to talk about Startup Chile. You get a grant from the Chilean government if you're a foreigner willing to fly down all the way to Chile to run your startup for 6 months and come back to the States. And that's like 15 grand. So I've been wanting to do that for I actually met the co-founder of Startup Chile. He just happened to know my professor at Booth, and they did a speaking engagement. And I wanted to fly out and just to hang out with him, because we hit it off. We had a separate call and everything like that. But I was always intrigued by Startup Chile because they had a very close relationship with 500 startups when I was part of 500 startups. So they used to always say like, guys, after this, go to Chile. You'll get like 15 grand, free office, expanded the Spanish market using Santiago. I think that's where they're located as a capital. And then you could have like another sub office there. So that was a really awesome grant. Another grant that we leveraged was, are you guys familiar with the NUS University in Singapore? They're like kind of like the MIT of Asia. They're one of the top universities in Asia. And they used to have a grant, not really a grant, but like a subsidized program where if you get one of their top developers and they work for you, you only pay them $25,000 a year. It was freaking amazing. So yeah, I know, right? Like that's crazy, right? And these are like really good engineers. And we had this one engineer, he was a Vietnamese student that was so smart, went to a Singaporean university. And he was like the Michael Jordan of programmers. He's so much better than the second guy. And then he's like a really nerdy guy. And then then all my co-founders were like, guys, like, how do we get him? Like, he's worth at least like 150, 120. Like, his coding skills were so good. Like, our CTO was like, if we don't get him, like, this second guy is so much worse. Like, we have to get him. Like, I was like, dude, why don't we just give him a $10,000 signing bonus? So in the middle of a meeting, we said, look, we're gonna just, what's your Venmo account? We're just gonna give you $10,000 if you say yes right now. And this is like a 20-year-old student from Vietnam. He's like, he has his glasses on, and then like, I don't have a pair of glasses. He takes him down and he's like, give me a second. Like does a little walk and comes back with his glasses on. He's like, okay, I accept. And then he was as good as our CTO who later got recruited for Google for like $250,000 salary or something like that. So there are these arbitrage opportunities that you can really leverage. And I think Startup Chile, because of COVID, you might be able to participate in their program and get just $15,000, maybe even virtually. I don't know. But there's a lot of cool things out there if you just look outside, even in the US, because that's one thing that we have as US citizens, or starting a company in the American market. Our market size is so huge that if you're ready to work with countries outside of here, there are people that are willing to work with you. Like for example, my investor group, like 20% of my cap table, I intentionally put international investors. I love them. Like a lot of American entrepreneurs are they're not as comfortable going into those markets, but I know the advantages of being very entrepreneurial, and also finding stuff like Startup Chile, right? You don't have to just rely on Chapman Ventures or Panther Cage Match. Like there's other stuff that's out there that if you're willing to look around, there's opportunities there. So this is Startup Chile. We can check out the website a little bit here. We'll just dig around. And just see here. So yeah, this is just one of the applications. You can apply now. $14,000 equity-free funding, right? Two cohorts per year. You go there, you work in Chile, and you can get extended for another 6,500 USD, just for working there. And like you don't really even have to do anything. And this is the accelerator program, $35,000 just for working there, and another extension, doubling that. I mean, come on. Like that's like 70 grand, like almost matches Y Combinator. You're giving away 0%. And the Chilean government supports this because they're trying to be the Silicon Valley of Latin America. Does that make sense? So you just have to, the scale program, I didn't even see this. I didn't even scroll down. It's 100 grand. So maybe you have you should ask like, okay, I have 50% female-led co-founder. Let me get an extension for this and this. So that would be a total of a whopping $184,000. Guys, anyone want to go to Chile with me? So look at how awesome this program is. And I'm sure this is not the only one. There's got to be more out there. This is just one of many that I've been tracking and one that I've been aware of. So something to look for. And whoops, wrong slide. So if this doesn't get you excited about entrepreneurship, I don't know what would. But hopefully that lets you guys think outside the box, more importantly. So I've always been a huge outsourcer. One of my outsource guys that I think I met through like freelancer.com, he's been working for me for 10 years now. He's now like 60 years old. He's been very loyal. He hits me up every like 2-3 months for like side projects. And I haven't given an assignment for like 1.5 years, but I always get like birthday messages on Facebook and stuff like that. I should check in on him. My book cover was an outsource guy from the Czech Republic. I came up with 400 versions of my book cover. Like, should I do 5 ducks? Should I use orange? Should I use yellow? But to be able to mass produce that many amount of book design covers, there's no way I could have done it if I didn't use an outsourced platform. Even networking and doing some digital marketing campaigns, I was able to get someone from Eastern European 18-year-old college student for about 75 cents for an hour. So it was really good because I was able to find a Canadian startup that outsourced that work particularly for college students. And then one of my outsource guys was able to get like Indian college students to outsource some lead generation work for 33 cents an hour. And then I negotiated that down to 12 cents an hour. So there's a lot of opportunity. I know that sounds really mean, but if they get like a deal and you give them a $50 bonus, they're like, holy moly. And they get like so excited. And you cannot compete against that. Like as an American, trying to get an internship, like, dude, there's like such a hungry workforce out there, and people don't understand how to tap into that. And with the modern technology allowing that to be so freaking accessible, you as an entrepreneur could really take advantage of a lot of these opportunities. You just have to poke 1 or 2 layers deeper than what you see on the surface. But here's just kind of like just the general overview so you get comfortable with the definition. So there's outsourcing, subcontracting, HR, primarily utilized by entrepreneurs to quickly gain outside expertise and capabilities. Obviously the con is loss of control, protection of IP, right? Certain countries, they might be a little bit more dangerous in this regard. Just be very, very discerning, but that's the risk that you take. Offshoring is when you kind of move a plant across the border, let's say, for example, to like Canada or Mexico, because of the trade wars with China. There was like a big, tailwinds that headed towards the customs brokerage industry, where I used to work as a consultant for a little bit last year. And what they would do is that all these car manufacturers and, just kind of like manufacturing factories in general, they were relocating all their factories into Mexico. So they would have these shelter companies under as a Mexican subsidiary, and then they would structure it as if they're kind of importing the products into the US to avoid certain regulatory restrictions. So there's certain, like processes to make it more advantageous or not. They have a specific term for that. It's actually really popular. It's called maquiladoras in Spain. Enrique, hopefully I didn't butcher that. Was that good enough for you? He's like, it's all right. Yeah, but that's just kind of like some examples that we have for offshoring. Strategies, I mean, these are the reasons behind it: reduce costs, leverage technology. If you go through HackerRank, it shows you which countries are best at certain certain coding skills, right? So let me pull that up. So oftentimes, you're trying to find, which countries are best at, certain skills, right? And certain languages. And HackerRank is a very popular tool, which a lot of CTOs use to create a test to see who's the best coder. And they would rank, which country has the best score. Not just the whole entire, like all around, but based on certain programming languages as well. So if you're looking for like algorithms, maybe you go to Russia. Data structures is China. Tutorials, what the heck is that? Hungary, I guess. Python, Hong Kong, AI, Japan. So it'll break down all this stuff for you. And you can really leverage and do some research. What I like to do is oftentimes is build some of these relationships with these freelancers. I keep going through them until I find someone who's really good. And then I just bring them on as an employee almost, or a consultant. And then I give them like a bonus for doing that. And there's nothing wrong with that. People do that all the time. So this is just, one example in terms of like outsourcing. So let's go back to the slide here. And so these are just some of the reasons, right? Improve customer value, gain competitive edge, reduce cost, expand into other markets. So check this out whenever you have a chance. What are some of the structures? Well, you have some stuff in IT that's related to design, application management, consulting, systems integration, R&D, contract research, clinical trials, business process outsourcing. This is really big, especially post-COVID. I've seen a really alarming trend where people have been outsourcing a lot of work. Maybe it's because a lot of people aren't at the office anymore. They feel more comfortable outsourcing that. But business process outsourcing has been pretty huge. E-commerce, manufacturing, those areas are pretty common as well. And in terms of economics, you're reducing labor costs, offset by increased management costs, cultural language, and time zone differences. Yeah, that's something that you should definitely worry about. Slightly increased telecom costs, I guess, maybe, right? Jobs more highly regarded in the offshore country, yet recent high demand created retention issues. I don't really worry about retention issues as much, because like if you have a really good company culture and you're really good at incentivizing people, it's not as concerning. Yes, oftentimes I agree. It's a more highly motivated workforce, because like, for example, if you guys read the book called Blitzscaling by Chris Ye and I think Reid Hoffman, the guy from LinkedIn, also wrote a little bit in it, but mostly Chris Ye, I think. And he talks about China's like 996. Have you guys heard about 996? Is that new for you guys? So their work week is 9 to 9 every day, 6 hours a day. So 9 to 9 Monday to Saturday, and then 6. You bring one of these guys full time, and it's like, oh dude, you work just 9 to 5, 955 in the US, 9 to 5, 5 days a week. Oh my God, this has happened. It's like working half day every day for them. Like, oh my God, thank you. They'll be loyal for you for 5 years, at least. And then they'll become too Americanized, and then they'll turn on you and then ask for like all these vacations and bonuses and stuff like that. But you give them, like 99, they go from 996 and like 2 vacation days a year to like 955, and then you give them 3 vacation days a year. They're like, oh my God, I will work for you till the day I die. So in terms of Priya's laughing, but in terms of like building that cultural bridge, I've really enjoyed it. I have all these cool friends like internationally now. My big thing in my life was like not to travel the world, but to do business all over the world. I thought that was way more badass than like, taking pictures in front of the Eiffel Tower. No, I want to close a deal in front of the Eiffel Tower, going on a business trip. Like that's badass, not taking pictures there. So that was my thing, and just kind of offshoring and outsourcing has been really fun. For example, yesterday I reconnected with my chief product officer from Turkey, and I remember flying out to Istanbul and meeting him and the rest of the team from SubGen, and he wants to potentially regroup again. And I said, hey, dude, like, we make it big again for this go around. Like, there's going to be plenty of opportunities for us to like, do all these business trips again, like globally. And he got really stoked about that. But it's just so important to just have a global mindset in this day and age. And it seems like most of you guys have a very diverse background, which is going to be very helpful for you guys. So key drivers to offshoring and processes offshored, reducing costs, number one reason. Current business processes offshore, like, these are some of the stuff that's really common. Even in India now, even if you're a finance firm, you can have a due diligence company look at the financials and give you an assessment and their own valuation and do the financial modeling for like $200. I'm not kidding. They'll write like a 100-page research book and everything for maybe maximum 500. But if you want to get like a quick, 10-page, 15-page report, if you sign a non-disclosure agreement and you subcontract that out as a private equity firm, they will give you a report within like $100 or $200 with really good quality, better than most MBAs. It's crazy because they just do that day and night. And most PE firms don't even know this. I know this because I'm a big outsource guy. But finance and accounting is really good. So those of you guys who are entering finance, don't be too surprised in the year 2030 if job market gets a little bit too competitive there, and a lot of your work is getting outsourced. In some ways, that's why I believe being an entrepreneur is safer than being an employee, because you can at least pivot and control your destiny. But that's obviously subject to everyone's uh, interpretation of the current market environment. So these are just some of the key drivers, right? Lowering costs, competitive pressure, service quality, etc. So look into that. These are just some of the websites that I've used and I'm aware of. 99 Designs is the design website I used. Fiverr, all sorts of things. TopTel for developers, freelancers, developers and designers. Upwork, I think just generally tech related stuff. There's also like ghost writing websites too. If you don't want to write stuff, your essays. I think it's called Reedsy, Reedsy. I have a Reedsy account, so if you want me to ghostwrite, you could technically request me. I set it up like 4 or 5 years ago, and it still pulls up on an SEO search, which is really funny. I've never got a request because I put like $200 an hour. I was like, all right, no one's gonna pay me that. But it's it's pretty funny. There's a lot of things you could do. Okay. What else? Managing vendors. Make sure to do a good background check, understand their business model, rates, interview all of them. Make sure you even talk to some of their customers if it's a big contract. If you're hiring like a vendor, even talk to their ex-employees, why they quit. Just try to get really good qualitative information. Make sure that they have a good reputation. They're not stealing like proprietary information. Even understand their management systems. Like, are they using like a waterfall approach, agile, Kanban, like kind of like the Japanese style? It's kind of like the Toyota approach, Kanban, for those of you guys that are not familiar with it. And just kind of understand like which companies work well with you. Certain vendors are just very horrible at, I guess like when you outsource work for them, because they know it's like loosely regulated. And when it's loosely regulated, their quality control is not there because they know that their vendor partner doesn't really quality control them. And they don't really care about the business as much as some of your in-house employees, if there's no oversight. So it's up to you to find a vendor that is able to consistently perform and do well for you. So just make sure you do that. Even fly out and visit the place if it's if it's a very critical piece to your business. So one of my dream ventures is to just have an outsourced business in Southeast Asia. I'm not sure which country yet, but I want to maybe learn the language and just have like my offshore place. I'm thinking maybe the Philippines, because I kind of look Filipino. I figured I'd blend in well too. And Tagalog is not too different from Spanish. So I figured, if there's a language I could probably learn, it would probably be Tagalog. So I'm, hoping maybe that would be the case. But, if I were to do an outsourced business, like I would fly out and establish my presence there over time. So those are just some of the things that you should consider. Other stuff, cost factors, transition costs, not just financially, but your time, your ramp up time, environmental factors, regulatory factors, labor laws, right? Cultural barriers, risk profile, business environment, logistics, all that stuff. Like some of the stuff that you should, be aware of and cognizant. You don't want to be stuck in a sticky situation because you haven't done your research ahead of time. These are just some, common work force offshore work places. I know Ireland, over in Dublin, they're trying to become a really, really big tech hub as well. So a lot of customer support and tech support is trending towards Ireland quite a bit. Russia, I'm sure you guys all know, big hub for developers. Poland, Czech Republic, Hungary, Romania, and we all know like China, India, Philippines, Malaysia. Bangladesh is coming up quite a bit as well. So something to keep an eye out. And Vietnam has really emerged in the past few years in terms of like offshore hub, because China's wages have risen considerably, and also the difficulties with dealing with China. given some of the political and economic rockiness with the relationship with the U.S. So this is just just kind of like a nice overview of that. Perception of offshoring challenges by experienced companies. Loss of management control includes potential loss of quality due to less oversight. So that's some of the challenges, operational inefficiencies, employee turnover. So these are just some nice things to kind of look at in terms of data. It is very difficult, just even with the time zone differences, the language differences. Sometimes when you're doing working with offshore people, English might be their third or fourth language, not even their second, right? So that's where it gets really challenging. And then maybe you have another offshore team, right? Like in Eastern Europe, and then they have to talk to another outsourced team in Southeast Asia. Oh my God. Like some of my meetings, I was just an interpreter for like 2 hours. And their cultures are so weird. Like I remember we were dealing with Thailand customers, and they were dealing with their I guess like their vendor in Thailand, because we had one of the biggest customers from Thailand. And then our development team was from Turkey. And then I was based in the US. So to coordinate a meeting was so incredibly hard. And then I don't know if it was their culture, but like, the engineers from that vendor would constantly forget the meeting times. And then some guys would show up and some guys won't. And then they would just blatantly say, yeah, one of the engineers is drunk at the bar. Let me go get him. And it'll take like 40 minutes for him to come to the meeting. And, we have our engineers from like Turkey, right, that are, just up really late until the wee hours of the morning just to accommodate them. And then when they're starting to talk to one another, like neither of them could really understand what the other person is saying, because not only is English, their second or third language, but they're also talking about very technical stuff. So then my job was to bridge, just that communication alone, which was a challenge. So like you couldn't, and I don't even speak Turkish or Thai, but just my English presence was able to really facilitate those meetings. So it's like very, very challenging in that regard. And sometimes, the developer might build something else, right? So those are just some of the risks that you're dealing with. Wage inflation could also happen too. So wages could continuously increase over time. And also keep in mind that like when you're increasing wages, you want to give them a raise according to their promotion. Because if you give them like a $1 raise, it might mean nothing to you, but it might be 50% increase, in their pay, right? So after a while, you're kind of regretting like, oh my God, like I give them 2 raises, now I'm paying triple this guy, right? Compared to what I can get in the local market. So you want to be very conscious of that, because when you start to scale, those marginal hourly wage bumps could add to a huge bill like later on without you knowing, because you just ignored it because the amount that you're giving out was so low. So that's one of the things that I caught myself doing in the past. But yeah, these are just some of the things in terms of wages, offshoring, outsourcing. Any questions? No questions? Okay, great. So we covered a lot in this class. We talked about launching a new business, metrics, how to raise money, how to negotiate term sheets, what VCs do, what PEs do. We pretended to launch our own fund, and then we talked about how to cut costs when you launch a company, how to get grants, how to get into incubators. You guys should know everything you need to know about being an amazing entrepreneur. I hope you guys feel prepared to tackle that challenge when the time comes. But congrats. This is the end of lecture. Tomorrow's going to be a pretty fun day. We're going to just do our VC and PE pitch competition. I applaud you all for taking this summer with me, especially on a 6 to 9 Friday schedule and a 9 to 12 Saturday morning. For those of you guys that want to connect prior to the final, please reach out to me, and then we can set up a time to discuss. And I will stick around for any questions, but if not, for those of you guys that are leaving tonight, I'll see you guys tomorrow.
Thank you.
Thank you.
Thank you very much, Professor.
Mhm.
See you tomorrow.
You, Professor.
So, what kind of like business are you doing in Turkey? In case of like, are you exporting and importing like products and services? Because we have like established company in Turkey, it's like basically for export and imports. That's why I'm like a little interested.
Yeah. So I had a